What's up, everybody? It is Wednesday, February 1st, and we had the Fed meeting today, and the Fed did exactly as I expected them to do. And by the way, you should expect them to do the same thing, because if one thing we know about this Powell Fed, I mean, it just follows whatever the market price is in. This is not a Fed leadership that really understands its role as a monopolist. It just, whatever the market price is in, that's what it does. The market was pricing in a 25 basis point. By the way, that was why, like, for a long time, I've been saying, every time there was this hysterical reaction and you know, the headlines, oh, everybody's worried about Fed rate hikes, you saw in the pricing of Fed fund futures. And by the way, if you know, you don't have to be very sophisticated. Just go to just Google the Fed Watch tool, okay? And it'll tell you the probabilities based on where Fed fund futures are trading. And I mean, that's exactly what the FOMC looks at, and that's what they do. So like when everybody was freaking out about, oh, the market went down today, because, you know, the media, they don't know what they're talking about. They got to look for some kind of explanation. So it's always like, you know, they're afraid of Fed rate hikes accelerating or whatever. It was the same, like, for a long time. That 25 basis points was there. And by the way, they have another 25 basis points priced in March. And then that's it. Then you go to that Fed Watch tool, you know, they're basically gonna pause at that point. And of course, all the monetarist zombies are gonna, maybe not all of them, but some of them, you're gonna see a lot of towels getting thrown in, folks. A lot of towels gonna be getting thrown in, which is what I said. Now, there's gonna be some monetarist zombies who are still gonna hang on to the bearish argument, because they're gonna be talking about QT. You know, for them, okay, well, maybe the Fed has stopped raising rates or slowed the pace of rate increases, but QT, and that's another thing they don't understand. Like, you know, and I've been all through this. Like, if you have a single variable, it's bad enough if you have a single variable analytical framework, which completely ignores other variables, right? But it's even worse if you have a single variable analytical framework and you don't even understand that single variable. Okay, I mean, like, how much off course can you get? And that's exactly what's going on here. You know, because they view rate adjustments one directionally, and you know, we've been through this whole rate hike thing now for a year, and that was automatically construed as negative. It's always construed as negative. There is never any discussion or consideration of the interest income that the government now has to provide, that the Fed is giving to the banks, literally handing them billions. If it's talked about in any context, it's talked about as, oh my God, how's the government going to afford this? It's going to be the biggest item on its balance sheet. You know, it's just like ridiculous, completely ridiculous. I mean, again, this analogy or this fixation of the government like a household that needs to get dollars. I mean, this is what is very, very disruptive to policy. Now, I think today McCarthy is meeting with Biden. Biden or the White House said they're not going to negotiate. They want a clean debt ceiling raise. You know, I've been talking about this as it would be a great irony, and it would be really kind of fun and funny if now the monetarists start to throw in the towel because the Fed is stopping the rate increases and they're all covering their short bets, and then by the time June rolls around, I've been saying this in almost every video lately that I've been doing it. By the time June rolls around, and the Treasury no longer has the ability to, employ these extraordinary measures as it's doing right now to meet payments, and then we go into a hard austerity. And at that time, if all the monetarists have flipped from being bearish to bullish and the whole thing caves in, I mean, I hate to say it, but it would be hilarious. And I would provide or give forewarning of that if it's to come. I'm going to definitely give it to my subscribers, that's for sure. Speaking of subscribers, today I said, in the morning I sent out an email and I said, any negative pullback in the market today, whether it's based on the Fed decision or before, that's a buying opportunity. Today was the first of the month, okay? And the first of the month is the biggest payments day, the biggest withdrawal day of the Treasury, the biggest spending day of every month. So we get like a 95 billion day with maybe a net of like 64, 65 billion. And, that's just a lot of water going into the swimming pool, right? The level's coming up. So you had to buy that dip. We bought that dip, and the market, we had a very nice rally in the NASDAQ. The Dow was down over 300 points. It was down marginally at the end. The S&P was up. So, yeah, that was the strategy. I mean, alongside my MMT analysis or insight that I give you, don't forget, I think a lot of people, you don't understand it. I've been a trader for over 40 years. I've been a trader on 4 exchanges as a floor trader and blah, blah, blah. You know my history. So, like, I could give you kind of trading tactics that are helpful. And today, this was an easy one for me to call. Now, looking forward, by the way, we had the EIA Weekly Petroleum Status Report came out today. We had another big build. We had a big build in crude, gasoline, distillate even built up today. And here's one thing interesting. We had this in the week ending, what was it, just this last week, the U.S. was a net importer of crude and petroleum products for the first time in 6 months. Okay, we've been net exporting crude and petroleum products, but now it flipped back. I think it's temporary. Although I just found that interesting. Like, why is that happening? Why? I don't know. Like, is Russia supplying the oil to, China and these other consumers that we had been supplying? I mean, I just find it to be interesting. Or is it just like our consumption is going up, but actually refinery inputs, they're not up that high. So got to keep an eye on that. I mean, if that flips around, if we go back to being a net importer of oil, that has implications, and that particularly has implications for the dollar. As you know, like maybe if you've been following me for any length of time, I said the fact that the United States now is a net exporter of oil and petroleum products, that is very bullish for the dollar. So even though we may from time to time run into these situations of fiscal expansion like what's happening right now, if we go back to being a net importer, then that's going to undermine the dollar even more as we enter, or as we are still in this environment of expanding fiscal. So, but I happen to think that we could see a bullish correction in the dollar coming up, particularly after mid-February and for sure, like into March and April, when we see these tax drains. I've been talking about this. March is going to have a tax drain, quarterly corporate tax drain. April's going to have, of course, April 15th. June 15th is another tax drain. So we could get a counter trend rally in the dollar. I'm actually right now a little bit long the dollar. All right, I might be a little bit early. I tend to be early on these things because I see these things developing, you know, way in advance. And so I like to kind of scale into them, you know. I don't wait for a line to cross or something like that. I don't think, by the way, I don't think like crossing lines or you know, moving averages are any more effective as timing tools than just, you know, I know what the fundamentals are, and that helps me have a picture of the forward outlook, okay, what's going to happen, and then I scale into it. That's what I like to do. So anyway, that's the update for today. I think we got a positive environment for the market, like I've been saying, at least through February 15th, which should peak out the fiscal flows. We're going to get a quarterly interest payment. One thing that I'm going to be keeping my eye on this year are those IRS tax refunds. Like last year, they were big. Okay, it was $260 billion from February, March, and April. However, you know, that was a period when the monetarist zombies, you know, went into full freak out mode because that's when the Fed started raising interest rates. And I do admit, like, at the beginning of the rate hikes, the negative impact was real. I talked about this yesterday. The negative impact was real because, you know, financial assets, they get discounted because of the higher rate. But then, remember, I was talking about that inflection point, which we hit in October of last year, when the fiscal flows, the interest income transfers, starting to exceed or offset the negative impact of the rate hikes. And I pointed that out to you at the time. I mean, I give you exact, not even exact dates, ahead of time what's going to happen. Nobody else is doing that, okay? Anyway, that's it for today. Let me remind everyone, please, if you like the video, please like and subscribe. That helps a lot with boosting the channel and getting more viewership. It's a very simple thing. Just click on the like button and click on the subscribe button, and I really appreciate it. And I hope you like my pizza making video, the dough thing that I did yesterday. Tomorrow I'm going to do part 2, because I leave the dough for 48 hours to ferment. That's when it gets real airy and bubbly, and it's, oh man, it's fantastic. So watch out for part 2 tomorrow. Anyway, that's it for today. Take care, everybody. Bye-bye.